Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management. Two important investment events happened to the FANGs this week, which was otherwise one of a sort of a creeping recovery. The first was the ugly revelation from one of the FANGs that I never would have expected. But second, offsetting that, we got a nice buy signal from another one of the FANGs. But more in a moment. Before we take a close look at the FANGs, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, let's start off with Amazon, and Amazon, of course, was setting back towards its HB2. Didn't get there, as it didn't get there a little bit earlier, but very, very close, and that is a 10-year low. I've really taken this for a buy signal. After that setback, it is now rebounding, as is, by the way, Netflix. Now, Netflix had a clear and clean breakout over its HB3 price. That 16 times book value had the requisite setback, hit the HB3 price perfectly, and is now rebounding. It looks very much as this stock may be heading for its HB4, higher prices ahead. Microsoft, well, Microsoft sort of just is. It's between two breakpoints. We're unable to forecast in a short-term sense where the stock may go, so we have been cheerfully holding it. The slope of those lines has been running, by the way, at about 15% compound. So just being there over a long period of time gives you a reasonable rate of return. Finally, NVDA, a company which has really frustrated me for some while, but this week, as I suggested was likely to happen last week, the stock came right down to its HB4 and has now rebounded. So at this juncture, of course, when you have you hit a breakpoint on the downside, we automatically buy it. Although I want to point out something very important. You don't have a lot of time when these companies get down there. That's why you have to have the information sort of in your hands and ready to act on. NVIDIA got down to its HB4, had a bounce, set back again, but that was it, and it's now moving on its way back up again. So on bounces and rebounds, you don't have much time to act. You have to know where they are. Alphabet, well, Alphabet had quite disappointed me. It broke out, but then it kind of broke back down again, and was kind of looking a little bit on the sloppy side. But in the rebound that has occurred in this past week, the stock has been recovering nicely, and I would not be surprised if at least it gets back to its bubble price. But then the question is, we're going to see if it and the market can carry us any further. Apple, well, we're going to be waiting for the balance sheet to see just exactly what has happened to the book value per share. Has this stock now hit an actual low when we see the numbers in retrospect, or have we got a breakdown? I think we're going to pull back to the HB5 price at least. We'll see, I think, what happens then. Finally, and most important, is Facebook. Right now, I am more regretful than ever that I did not recommend that you exit that stock when it was recently at its bubble price. The eruption of inside information on the inner workings of Facebook are a revelation of shattering import, even if many people already knew or thought they knew. An associate of mine laughed at me, literally, for my ignorance that this had been going on. But I pointed out that it is one thing to think you know, even believe you know, and it's another to have your nose rubbed right in it. The company's initial reaction of blatant denial in the face of overwhelming evidence to the contrary is disturbing, and perhaps most of all to governments who are already looking at Facebook with the jaundiced eye. I would have to wonder if further fallout, particularly regulatory fallout, will ensue. When you look back at the SVA chart to 2018, you can see what the effects were of the Cambridge Analytica scandal. Namely, there was a 2 breakpoint decline in the valuation of the stock, as it takes time for both the negative publicity effects to wear off and for the company to show evidence that it is sincerely taking action to resolve those issues raised to the comfort of government. This is not just a local, by which I mean, by the way, a U.S. issue. This has global implications, as many governments have a strong interest in bringing Facebook to heel. Right now, the stock has about 10% to go before it reaches our immediate downside SVA target at its mid-super growth price. That's 5.5 times book. Personally, with all that's happened, I would be tempted to sell now and try to trade back in again when it gets there and see what happens. But after that, I would be very careful and very watchful going forward. In summary, there are now 4 stocks in our Phantom FANG portfolio that I'm comfortable with. Amazon and Netflix, which have held their ground, and NVDA, which has just given us a trading buy signal, as I warned last week. Microsoft, well, it just is. I suspect that Google will retrace up to its bubble price at 7.4 times book, and then we'll see. And I'm crossing my fingers on Apple to see what happens when we get the next balance sheet. I'm going to make a trade out of Facebook for now, that is out and then back in again, and see what the fallout is going to be. My key takeaways for this week are, as far as the overall market is concerned, we did not come even close to testing the super growth price for the Standard & Poor's 500, and it looks as if, no promises, that we may have seen a shorter-term low. My low super growth price target for the Standard & Poor's remains intact. But second, that Chinese real estate company, Evergrande, may be symptomatic of a much, much deeper challenge to global markets to emerge from that country and its government. I would not turn my back on this issue for a moment. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.